Warren Buffett is often referred to as the Oracle of Omaha and has built a legendary investment career through his company Berkshire Hathaway. One of his hallmark strategies is investing in companies that offer consistent and reliable dividends. He is arguably one of the greatest investors of all time and has a net worth of $155 billion. In this video, we're going to go over Warren Buffett's top dividend stock positions, what these companies do, their financial health, and how they align with Warren Buffett's investment philosophy. As of March 2025, these are the top stocks in Berkshire Hathaway's portfolio by the number of shares based on 13F. So the first stock is going to be Bank of America. The second stock, Coca-Cola, sitting at 400 million. We have Kraft Heinz at 325 million. Apple, which is one of my favorite stocks, at 300 million. And then we have Occidental Petroleum at 265 million, American Express 151 million, Sirius XM 19 million, Chevron 118 million, Kroger at 50 million, New Holdings at 40 million, which is not a dividend stock, so we will not be going over NU. So the first stock is Bank of America, and it's one of the largest financial institutions globally, offering a wide range of banking, investment, and financial risk management services. Its diversified business model includes consumer banking, wealth management, and corporate banking. It has a dividend yield of about 2.5% or $1 per share of Bank of America. The payout ratio is around 32%, so very healthy, reflecting a balanced approach to dividends as well as retained earnings. The dividend growth rate is at 8.51%, with steady increases and a focus on post-financial crisis recovery. Buffett values Bank of America's strong market position, prudent risk management, and its focus on digital banking innovations. The bank during economic downturns and commitment to shareholder returns make it a fitting choice for its portfolio. Coca-Cola is the second company on Warren Buffett's list. It is a multinational beverage corporation offering over 500 brands in more than 200 countries. Its product portfolio includes sparkling soft drinks, juices, dairy beverages, and bottled water. As we can see, Coca-Cola Company is up 24% in the past 5 years, and it pays out a dividend yield of 9%, or $2 for every single share you own. Now, if we take a look at the dividend information for Coca-Cola, it has been growing its dividend for 63 years, and it pays out quarterly. This is one of the reasons why everyone loves holding Coca-Cola for the long term. Coca-Cola is a business that is never going to go out of business. People love their fizzy soft drinks, and overall, it's a very stable dividend company. It also has a dividend growth rate of 5% and a payout ratio of 82%. So it's giving out a lot of money and revenue back to its shareholders. Since inception, Coca-Cola has seen a return of almost 27,000% since 1962, which is pretty crazy. And Warren Buffett loves this company. It's been great for stock appreciation as well as those nice dividends. Warren Buffett appreciates Coca-Cola's global brand recognition and its ability to generate consistent cash flows. The company's shareholder-friendly policies and dominant market position make it a cornerstone in his dividend portfolio. The third largest holding in Warren Buffett's portfolio is the Kraft Heinz Company, KHC, which has a very high dividend yield of 5.12%, giving you $1.60 for every share that you own per year. And if you take a look at the 5-year chart, it is up 17%. So pretty good stock appreciation as well as a very high dividend. So it's no wonder why Kraft Heinz is a third largest holding in his portfolio. If we take a look at the dividend stats, we have a payout frequency of quarterly, which is pretty common for dividend stocks. They love to pay out quarterly. Payout ratio is going to be 70%, and it has a shareholder yield of 6.73%. This is his third largest portfolio holding because he sees value in Kraft Heinz's strong brand portfolio and its potential for operational improvements. Despite past challenges, he believes in the company's ability to adapt and grow, providing steady dividends for its shareholders. Next up, we have Apple. Apple has been one of Warren Buffett's largest positions for quite some time now, and there is a good reason why. It has a market cap of $3.5 trillion, and it is up 183,000% since inception back in 1981. Now, while this is a dividend paying stock, it doesn't pay out a large dividend, but it's very nice to see that Apple has been paying back to its shareholders at least some sort of dividend at 0.42%. Now, if we take a look at the dividend stats, the payout ratio is under 16%. So it's a very conservative approach to dividend payouts. It wants to reinvest back into the company and grow. And that's really how we're seeing that high stock appreciation. Now, even though we have a low dividend yield of 0.42%, it has been growing its dividend for 10 years now at a growth rate of 4.17%, which is very good news as a dividend portfolio holder. Warren Buffett invests in Apple because of its strong brand loyalty, robust financials, and its ability to generate substantial free cash flow. The company's commitment to returning capital to shareholders through dividends as well as share repurchases aligns with his investment principles. Now, the fifth largest holding is ticker symbol OXY, which is Occidental Petroleum Corporation. It has a dividend yield of 2.10%, but if we take a look at the stock chart, it is very volatile. It is up 85% all time, as well as in the past 5 years, it is up 45%. Warren Buffett has a pretty large holding in this company and really believes in oil and gas. Now, if we take a look at the dividend information, it has been growing its dividend for only the past 3 years, but we do have a nice dividend growth percentage of 18% and a payout ratio of 39%. But it does pay out quarterly and a dividend yield of 2.10%, a very healthy dividend yield. As with the other companies, he sees the strong cash flow and commitment to returning capital to shareholders while also investing in future energy products. So he's very long term on this company and for good reason so. Now, the sixth stock, we have American Express, ticker symbol AXP. Now, American Express is a global financial services company best known for its credit card, charge card offerings. It caters to both consumers and businesses, providing payment services and expense. It has a dividend yield of 1.19%, giving you $3.28 every single year in dividends. It has a nice 5-year chart as well, being up 148% in the past 5 years. Now, if we take a look at the dividend stats, it does have a payout ratio of 23%, so pretty low. It's reinvesting back into the company. It has a nice dividend growth of 16%, but it's only been growing its dividend for the past 3 years, and it pays out quarterly, which is nice to see. If we zoom out on the all-time chart, it's no wonder why Warren Buffett invests in this company. It's up 5,660% all-time since 1973, while paying that nice dividend yield of 1.2%. Warren Buffett admires American Express's strong brand, customer loyalty, and its ability to generate high returns on equity. The company's focus on premium customers and its integrated business model aligns with his preference for businesses with durable competitive advantages. Now, while the seventh largest holding is going to be SiriusXM, this is not a company that I personally would invest in. It does have a dividend yield of 2.5%, but if we take a look at the chart, it's been doing pretty bad, especially the max all time. It's been struggling. So I'm not sure why Warren Buffett loves SiriusXM. It used to be good back in the day, but we have Spotify and Apple CarPlay that pretty much everyone uses rather than SiriusXM nowadays. Now, if we take a look at the dividend information for SiriusXM, as you mentioned earlier, 2.5% dividend yield, dividend growth rate of negative 23%. If we take a look at the dividend history, it is very choppy. We see cash amounts for 27 cents, 2 cents here. We have more 2 cents. We have one for $2.14. So very choppy dividend history. Honestly, not one of my top picks. But Warren Buffett does have a sizable position into this stock. I'm personally not going to be buying this stock anytime soon. Now, just like Occidental Petroleum, Warren Buffett also loves his Chevron Corporation, CVX, has a market cap of $200 billion with a high dividend payout ratio and high dividend rate of 4.47%. Take a look at the all-time chart. It's been doing pretty well, but pretty volatile, just like the other oil and gas company. And if we take a look at the dividend information, this is why people love this stock for its dividends. It has a dividend growth rate of 7% while growing its dividend over the past 38 years, which is very sweet to see. It's been growing its dividend, it pays out reliably, and it also withstand the COVID crash, which is amazing to see. And especially with the new administration, I can say for sure that Chevron is going to be a great dividend stock that's not only going to be paying you reliable dividends, but stock appreciation as well. Now, the last stock and ninth stock on our Warren Buffett's list of top holdings is going to be the Kroger Company. Now, Kroger is one of the largest grocery chains in the United States and operates supermarkets, convenience stores, and online grocery services. It has a dividend yield of just over 2%, paying you $1.28 for each share that you own. If we take a look at the 5-year chart, it is up 90% in the past 5 years. Very nice to see, as well as all-time 4,172%. If you take a look at dividend information, it has a dividend growth rate of 10%, as well has been growing that dividend for the past 10 years. So with this company, you're getting reliable dividends, stock appreciation, as well as a very safe, stable company. Warren Buffett loves this stock because of its ability to generate stable cash flow, making it a reliable dividend payer. Now, there you have it, the top 9 stocks that Warren Buffett has in his largest holdings in Berkshire's portfolio. 9 of the 10 largest holdings are dividend paying stocks, and those are the stocks that we went over. Warren Buffett's investment philosophy revolves around owning strong businesses with durable competitive advantages. These dividend paying stocks provide stability, cash flow, and long term value, making them key holdings in his Berkshire Hathaway portfolio.